Hey everybody, welcome back to another episode of Ryan Makes Sense, where we talk about personal finance, investing, and chart analysis. Today we're going to be talking about Johnson & Johnson, the giant drug maker. You may recognize their brand on powder bottles, baby formula, and I think they do have some adult medications as well. I believe they had a COVID vaccine, but I don't remember how popular it was. But let's take a look at Johnson & Johnson today because I think it's about to hit a super cycle low, meaning this stock might take a really quick and fast dip before recovering. Additionally, J&J has been a dividend aristocrat. I don't know if I'm using that term correctly. I will take that statement back. J&J has been a dividend powerhouse. How about that? They've been paying dividends ever since 2006. Intermittently, up until 2006, 2009. Then pretty consistently through 2009 to current. It looks like there may have been a little bit of a pause in 2010, 2011. But they're paying a dividend. Let's take a look at their fundamentals. Let's take a look at their sales and their income, their market cap. Let's also take a look at their cash on hand and their debt in relation to the shares that are available to trade to people like you and I. This is going to give us a better picture of what Johnson & Johnson, the J&J stock, could actually be worth. And then we're going to take a look at the charts so I can show you guys where I think the super cycle might be heading. Let's dive right in. All right, so I am on the world's greatest and most powerful website, finviz.com. 1000% recommend that you check it out. Do it on a laptop or desktop computer. It is very hard on your mobile device. So I am just going to go to the search bar right here, and just going to type in JNJ, Johnson & Johnson. And I'm going to move my big old head. And we're going to look at to see what the price of the stock could or should be. So looking at the pattern here on the daily, kind of looks like it's just going between supports and resistance. Here's this blue line of support, purple line up here of resistance. Going on down. So very profitable company. They pay a 2.9% dividend. Let's go ahead and dive right into the calculations, and I will explain them as I go forward. But first and foremost, just looking here, the price to earnings is 33.6, meaning currently right now it is overvalued, but the forward price to earnings are showing that in the future it is going to be cheaper at these levels. So a little bit of mixed messaging there, so I'll clear that up for you. Institutions own 70.8% as of the last time FinViz was updated. I will show you an up-to-the-date website that will show you the most recent insider filings as of 5/11, which is when we last trading day since I'm recording this video. All right, so I'm going to bust out the calculator. All right, so I'm going to take the sales plus income plus market cap. I only add the market cap if it's over $1 billion, and in this case it is. So we're going to take all that. So everything is in billions, thank goodness. So everything is going to be shorthand. So 96.26 billion plus 12.72 billion plus 416.41 billion gives us 525 billion. And now we want to add in the cash and we're going to minus the debt. We're trying to get a super clean, accurate number. And just looking right here, they spend 30.9 billion to make 94.9 billion. That's pretty good. Net income is looking good. Okay, so they have 5.368 billion in cash. So we're going to do plus 5.368 billion. And they have total debt of 39.659 billion. So minus 39.659 billion. So that leaves us with 491 billion left. And so just going back here really quick, total assets, 187 billion, amazing. Total liabilities, 110 billion. So that's a healthy ratio there. And so now we are going to take the 491 billion divided by 2.60, which is the shares float. And it says the fair share price of this stock is 188. It's currently at 160, so it's close. And then analysts have the stock going to 179. SVB Veerlink and BofA Securities kind of using the same, I guess, calculation I am. So based off of this, the stock price should be 188. Institutions own 70.8%. Let's check Fintel to see. Let's see what it actually is. I'm going to guess it's higher. So 70.80. Fintel, the most recent up-to-date filings, have 71.37. So there is some consensus of an agreement of some sorts that this stock is undervalued. But I do, just based off the chart, see this going lower. Let's now take a look at Thinkorswim to actually review the chart. So we are now on Thinkorswim, amazing platform. And I want to show you guys the super cycle that I am talking about. So what we can see here, I have drawn all support lines. This bottom support line goes all the way back to 1994. And we've seen it touch over here during the 2009 crash, I guess. And then we haven't seen it touched since. And then we have this next support line here going from the 2009 low and just capturing the support here and onward where we've only seen it touch once. And then I have another support created here where it's basically going off this candle and capturing the supports along the way where we have, 1, 2, 3, 4, 5, 6, 7, 8 showings of support. This one candle right here acted as resistance. So it's definitely testing it and giving us a sign. So I'm going to draw a channel downward. So what I'm drawing here is basically the stock price has never came above this line and closed for the month. And then this line that I'm drawing on the lower portion is the support where we've seen the stock bounce as resistance or support. So let me show you what I mean. Right here we have resistance where the candle butts up against it. And then we have it these three candles right here. It's acting as, it breaks through, it falls through, acting as resistance here, acting as support, acting as support, acting as support. Then we come back over here and it's acting as support. So I see a downward channel coming, but now we need to figure out, okay, we have a downward channel coming, but where can we potentially see a touch point on the bottom? So if we can take a peek, I'm going to remove this drawing. We have a deep red candle right here and a deep red candle right here. Let's capture those bases. So I'm going to click the very bottom of that, and I have the bottom right here as well. Whoops. And this goes to like right about there. So we've never seen the stock price ever go below this blue line that I'm talking about. It's came down once, tested it, came down twice and tested it. And now look at where this direction is going. This has been going this direction since August of 2021. It went upward and now it's kind of in this down, up channel. So the apex of where these lines intersect are going to be right in here. A price target of around $135, which is about $25 from where it is currently, where we could see a potential test and bounce, or maybe it'll try and stay above and it might come below and come back and test this gray line right here. So another reason that I want to show you that supports this narrative, I'm going to draw another set. I'm going to draw a channel that's been essentially going upwards. So right here, I'm drawing this channel just like this. So basically this blue channel that I just drew, the stock price has been in this channel for well over a decade, since 2011, and it just broke and closed several months below right in here. So we have a long-term uptrend that was amazing. If you would have bought in at the most optimal price, you would have bought in at 47 and sold at 186. This has been confirmed broken, and why I say it's confirmed is because we have 1, 2, soon to be 3 months closed under it. And we can see the stock has had a really hard time breaking and staying above this level right here. The 180. It's had a really hard time with that. So I can see it coming down right here. Let's extend to the right. We're in a huge ascending triangle. It's going to come down right here, work its way back up, and test this area right here. So, yeah, that is my opinion. I would do your own due diligence, but I think we are reaching a bottom of the super cycle. Again, the last time we hit the bottom of the super cycle was 2015, and then again was 2020. And this next one's 2024. So about every 5-ish years, notice a pattern, and I can even solidify that. So we go here and then here. So we have there, and then the next arc is literally right here. Can you see where this little trough is like perfectly right there? I couldn't have choreographed that better. So, yes, I think the next few years for Johnson & Johnson are going to be downward, but I think if you are a long-term minded investor, this might be a really wonderful time for you to add to your long-term dividend portfolio. Or even if you have a retirement accounts or whatever, I would speak to your financial advisor, talk to them, maybe show them this video or this potential trajectory, ask them their thoughts. They're the financial experts, so we'll let them do them. But yeah, I just want to share my Johnson & Johnson super cycle for you guys. If you found this video helpful or you stayed this long, please consider subscribing. It helps out a lot. And hitting the like button. That makes me happy. But until next time, I hope you guys take care. Talk to you soon.